Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our free weekly video report for Wednesday, April 26, 2017. Sorry for missing the past couple weeks. I've been traveling, and honestly, we have been extremely busy over here, and hopefully, you guys have been staying on the right side of the trade because this market has been very unfair to people that were waiting for just another day. And as we've seen, from the low on Friday to what happened over really the last 3 days, the S&P has rallied some 60 points, and there was no chance to get out of any short positions if you held them because they gapped the markets up 25 points on Monday, then gapped them up another 15 on Tuesday, and then today we had some more upside, and then from there we had a little bit of a pullback. So there was no chance to get out, and you had to anticipate when these turns were coming and how to position your portfolio, or you learned firsthand exactly how painful that can be. So at Sentiment Timing, we believe that human beings in the markets are irrational, and there's always going to be an irrational element at work, and that is what creates market opportunities. Now we find these market opportunities through the technical timing indicators that Woody uses that predicts when trend reversals are going to take place, and they usually happen, anywhere from 2 to 3 weeks to even 4 weeks in advance. Members know exactly when to be expecting a low and a high. Now, a lot of times we get very excited when there's a top coming because when the markets are going down, it gives you opportunities to trade both the upside and the downside. When they're kind of just melting up like we saw from November, they're boring and there's not much to really do. But the thing is, if you know when to expect tops and when to expect lows, you can position yourself, and as you saw come Monday, have massive gains in a very, very short amount of time. So the sentiment is what we use to kind of confirm the turn date that is coming. And most of the time we see, if there's a low coming, we see sentiment at very, very low levels, meaning nobody's really expecting a rally. And when everybody is expecting the market to go to the moon and we're expecting a top, we have sentiment that is at extreme bullish level. So there's always going to be some type of extreme sentiment reading right before your bottoms and your tops. It just always happens like that. That's the human nature, and that is really the mistakes that people make in the market. From there, we just use technicals to try to figure out where turns can take place. Are we seeing divergences? Are they supporting the sentiment and the timing? But that's really just more of here's a visual of where things could turn. Our main thing is the timing and the sentiment. So just to walk you through on in November, going before the elections even came out, what he was saying that he was expecting a post-election rally. So I'm going to walk you through the process here. And on 11/17, he was saying that what's the best way to have a 20 or 30% market decline, and that's to spike it up to new highs to 2,300, 2,350. Obviously, it went to 2,400, but again, this was made in November when the S&P was some 250 points lower. A good decline will occur in 2017. So we knew that, the rally that started, yes, there is going to be some bumps along the way, but really we not to be looking for a big decline until 2017. So in December, we kind of narrowed that down where Woody said that he was looking for, in the February zone for some type of top to take place. And then as we closed in on that, we came in and said that the March was when the kill zone is going to occur. And if we just take a look at things, you can see that this was March 1st, and this is exactly when we had a big move down. I actually personally thought it was going to go a little bit further than it did, but it was the largest decline that the S&P saw since Trump took office. So the current report that I had showed you 2 weeks ago was that he profiled for another trading high near, and I couldn't give you the dates on that, but there was going to be downside into, and this is the date part that I showed you yesterday. So going all the way back to when we were in April, we were looking for what? The low to come in on 419. So again, you can see how you knew when to expect a top and when to expect a bottom, and that was just about the exact day that the low came in, and from there we saw what took place, and that is the S&P has rallied from 2334 up to just about 2400 in 3 days. So if you are shorting the whole time into that, you got squashed. If you are holding a little bit of a short just on a carryover, you didn't get hurt that much, but you may not, if you got long, it was fantastic. But the thing is, if you were pressing the short side going into that date, it was not a fun ride for you. So here's our report that we just put out yesterday, and the profile was for down in March, pop in April, followed by further correction into 419. That is taking place. Now we know when to start looking for the next low date, next high date. So again, if what would you do if you knew these dates going back into April 6th? That we were looking for the top to come in on the 19th. Well, here we are again. We know when the next top is going to be taking place, but it's also going to be a very, very choppy market. And there's some dates that are coming up that Woody is looking for, and Woody's saying it could be followed by a good decline for 3 to 5 days, followed by further upside into. And again, we can't give you these dates, but if you knew them, back here where it wasn't for dates and members only, you would have known not to be short going into the 19th. Well, the same thing is taking place. You can be buying this market, but if you buy it right into the next turn date, it's not going to be fun for you because these markets aren't giving you a chance to get out. So right now we're in some type of range right now. If maybe it comes down and then we pop back up to the 2400, maybe even a little bit higher. We're still within this range. Excuse me. We have a little bit of a bearish divergence that's starting to form, but it's not exactly there. We have it on the 15-minute chart here. So a little bit more of a pullback. I'd keep an eye on the 2383. And if it breaks through the 2377, then you start looking at the 2371. And if it breaks through that, then this is some major support levels. And this is where most likely buyers are going to start coming in. So if they, comes down here and you buy it, you just have to know when you buy it when to unload it, because there's some turn dates that are approaching and you don't want to be long when they hit, because we're going to have sentiment that's going to be at extreme levels. And if you are not positioned for the market to turn, you're going to get caught on the long side. But if you're buying right now and you don't know when the top is going to be in place, or technicals are telling you not to chase the rally, then you're really running blind. So we know when the top is supposed to be set, where we're going to be having a anywhere for a 3 to 5 day decline. That's not set yet, so you want to keep an eye on some support levels. And again, I'd watch the 2381, 2371, and if it gives you a chance, down to the 2363. Now we have the bearish divergences here, and we don't really have them on the 60 minutes. So what may happen, and this is just from a technical view, is we may get a little pop up, break these highs, and possibly come up and test the previous highs at the 2400. But from there, that's probably going to set up some bearish divergences on the 60-minute chart. But you don't want to be shorting, aggressively on it for the big move, because the top's not supposed to be set yet. So we're probably going to get some choppy grounds. We're going to build some type of a range. Right now, the range that I'm looking is really big. I expect that to kind of let it get a little bit smoother than where it is. So we may form a bottom at 71, and then we'll have a top at the 2398, and we know that's the range. And then as we approach the turn date that is coming, from there, we're going to know that once we get to the top of the range, that this is when you want to be taking a short position. But until then, buy dips, sell rallies, and you just play the range that's going to be set. But as of right now, we don't really have the range to set. The range that we have is this really big one, and that's not really tradable. So you want to wait for the low to come down, make some type of support, come up, find out where the resistance is, and once we build a trading range, you sell up top, you buy down low, and you don't expect a big move. Now there's another really really big move to the downside that's going to be coming. It's not here yet. It's not even in the next month or so. So it's down the road, but it's coming. And everybody that is listening to this, if you don't know when those dates are coming, which we don't have as of right now, so I'm not trying to get you to subscribe to get to that number, but we will know it well in advance, and it's probably going to be anywhere from 14 to 30 days in advance. But if you're long going into that, though, that move is going to be fierce to the downside. And this move on the downside that we were expecting, yes, it was the biggest move that we've seen to the downside since the elections. But this one is going to get wiped out, and it's going to be dwarfed by the next one, because this has always been a buy the dip drop. And the next one is going to be, where people get very, very scared of what's going on with the market, because we haven't seen a 2, 3, 400 point drop in years. So if that takes place, a lot of people are going to be calling a bear market, and from there, that's probably going to mark the low. So I'm keeping the same thing where I'm giving you the free membership to the Markets Path if you subscribe. I think the special we have going right now is the 149 for 2 months, and then after that, it goes to the regular 149. But again, um, for the price that you're going to be paying to know when to expect these next turn dates to come, it's going to be well worth $150, because as you saw that what took place on Monday, Tuesday, and into today, if you know when these dates are, you can have an easy 60 points to the upside or the downside in a very, very fast manner. So until next week, good luck with your trades, and I will talk to you guys later.